Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. In this video, I want to talk about some stocks that were down today pretty bigly. In addition, they've just been down in general. The first being LMND, which is an insurance company that deals mostly with millennials, and this is a very hyper-growth company that they aren't profitable just yet with a market cap of $3.57 billion, and today it fell under $60 for the first time I think in a while. We'll take a look at the charts in a moment. But it's under $60 now, and it was down 6.39%. And I believe $60 was a psychological support line that has now been breached. The next stock, taking a look at Mercado Libre, this one had earnings last week, and it was up quite a bit. We see that earnings, it was all the way up to about 1,700, and then now we're trading under 1,500. And ever since then, we're now down 13% from where we were just 2 weeks ago. So what is happening with these high growth stocks? Mercado Libre, they're kind of like the South American Amazon. They deal with e-commerce over there. They have a market cap of $73.56 billion, and I know there is a lot to like about this company long term, even though they're showing a lot of weakness in the short term. The next company being The Honest Company, and this is a stock that has been pumped recently by Jeremy Lefebvre, Financial Education. However, if we look at the last, let's say, 2 months, we're trading at similar prices to what we were trading at before, but toward the low end of that range, and this is a tiny market cap of $806 million. The next stock being a pretty popular one in the market is Sea Limited. They have a $173.6 billion market cap, and looking at the last, 5 years, because since that March crash in 2020, this one has been going pretty much straight up, 600% plus. Even though right now, during the earnings time, we have a little bit of volatility from our all-time high around 370, roughly, we are down about 14%, which again is pretty significant, but in the grand scheme of things, we're still much higher than we were even half a year ago. But we are in that bottom range of where we have been trading recently over the last 2 months, let's say. Next up being Draftkings. This one is now under $40, trading at $37.87. We see, again, a sell-off with this one, down 3.59% with a market cap of $30.26 billion. And if we look at the last year, this one, again, has been pretty volatile. We made new 52-week lows. We saw highs that were above $70 earlier this year. I believe this one may have also been a SPAC. I'm not entirely sure because that's when I started getting into the market in early 2020. So I always saw Draftkings on the exchanges, even though I knew it was a new-ish company, whether through IPO or through SPAC. But we are trading at a relative low to where the stock has been trading ever since it's gone public. In the next three stocks, we have Visa, Mastercard, and PayPal. These are all financial technology companies or fintech companies, with PayPal at a market cap of $242 billion, Mastercard at $352 billion, and Visa at $436 billion. And they are all down today. Visa down 4.75%, Mastercard down 2.3%, and PayPal down 4.36%. So I know with Visa and Mastercard, that has to do with the news that came out from Amazon. They won't be accepting cards from Visa or Mastercard out of the UK. Now, I know that's news that's noteworthy, but is it really changing the fundamentals of either one of these stocks long term? I mean, yeah, in the short term it sucks. Okay, Amazon doesn't accept them in the UK, but there's so much more to like about these companies. Are these sell-offs justified? Visa and Mastercard are also pretty synonymous. The stock prices similar. I mean, they kind of both trade very similarly, even though not exactly. We see the shapes kind of similar, even though they're pretty different at the same time. But we do see recovery in both of them toward the end of the day, especially with Mastercard over here. It started off at 360, sold off, and then ended the day at 359. And with PayPal, we thought this one was recovering. It had lows of about $200 for most of last week after the earnings, and this week it looked like it was finally recovering, and it had bottomed at the low 200s, going all the way up to about 215, and again today dropping back down right where we were before. So that's PayPal and the recovery. And the last stock I want to mention is probably the most active and most hyped stock in the market right now is RIVN. This one IPO'd last week, and we could have gotten it as low as $95.20. And yesterday we saw the high of $180, and now we are trading 15% lower at $145. This seems like a pretty obvious put option. I'm not very well versed in buying short-term calls or short-term puts, but I mean, if there was one that I wanted to buy, it would probably be this one. However, at the same time, the IV must be so high right now that you are paying a lot up front, but if you are correct and it does end up dropping a lot, that put will pay you quite a bit. And taking a look at the option chain, if you chose a strike price of above, let's say 190 all the way up to 220, you would have had gains today of upward of 20%. Is this trend going to continue? Are we now at the beginning of what's about to happen? We'll just have to take a look at the candlesticks. So the first one we're looking at is LMND. So I drew these lines over here previously because $60 was a crucial support line that we saw. It didn't quite touch it over here, but we saw it earlier in May of this year, as well as the end of November, beginning of December last year. And this could be a sign for things to come. If it's unable to hold, we could be going down as low as next major support, which would be around, let's say, $45. And for those that can't math, that is about a $15 difference, which would end up, which is like another 15-20% from here. So assuming you like Lemonade and you are a growth investor, or you claim you are you willing to buy now at the potential that it may not see those lows, or the potential that it may go down 20% to 45 or even below? Are you willing to average down and feel that pain for months on months until it eventually comes around, recovers, makes new all-time highs, the company executes, and so on? Are you willing to wait for that? Yes or no? And then you can decide where you want to buy Lemonade stock. The next one we have Mercado Libre. I'm going to draw another line right off the bat, let's say at this 1450 area over here, as well as one more which we will draw at, let's say, 1350 as well. And for good measure, let's do one more at about 1300. You could even draw one more over here, one more over here. I don't want to draw too many though, just so things don't become too messy. I think the less things that are on your chart, the better, because in actuality, the simpler you make it and the less indicators you have, the more clear and less clouded you're going to be when making judgments. There's so many different ways, just like working out, that you can make money trading and investing for the long term, so use whatever indicators work best for you. So looking at this one, so we had earnings around here, we had gapped up, and it looked like we were making a double bottom, but it looks like it faked out. And we're now reaching the bottom of our support line over here. So we want to see 1450 hold. If it doesn't, the next stop will be 1400, 1375, and these lower supports over here, because if these break, then you're looking even lower at 1250, 1200, and so on. Looking at the Honest Company, this one is very, doesn't look too good at all. I mean, we had increased volume today on this big red candle. Like, are we making new lows? Probably. Not for sure. We have a big gap over here from August that hasn't been filled, and I think this company is just going on hype right now because of YouTube and retail and it being under a $1 billion market cap. Not to mention also just IPO'd earlier this year in May. So it's still a new company, the Honest Company. I don't have much more to comment on it other than the fact that I know it's very hyped up right now and retail is really looking at it, and we could be potentially making new lows on this increased volume on this red candle. The next company, SE. So the first thing I want to show you guys on this chart, I'm going to get rid of the 20 EMA and I'm going to show you the 200 simple moving day average. So we'll get rid of that. We'll go to indicators and write moving average. We'll click on this over here. We go to settings. We go to inputs, 200, and I like making it purple because that's just what I'm used to. So we'll go purple over here. And this is the 200 simple moving day average. Why don't I see it? Because it says 9,200. Okay, the 200 moving day average. All right, and going all the way back to the beginning of the crash in early of 2020, you just see how much this one has just gone up and up and up. This one, whenever it goes near the 200 SMA, it's been a buy, and it hasn't happened very much, only earlier this year in March and in May. The stock was trading at $200 a share, now trading at $310, pulling back from its highs of $370. We're pretty near-ish that 200 SMA, kind of like we were over here. And what you notice as well, what we also notice, other than the increased volume from all the earnings trades, we also see a big hammer candle. So we had a lot of buying pressure, and I'm sure a lot of algorithms out there and big fund traders as well are looking at the exact same things that we're looking at. And that's what I find trading so cool, that we're looking at those same charts, same indicators that the big hedge funds, institutions are also looking at it. The next stock being Draftkings. Look at this one at the weekly, it just doesn't look good. Red week after red week after red week, we could draw some lines of potential support. So let's say over here at the $30 mark, which is quite a ways away from where we are now, and we can probably draw maybe one more over here at about 35. And it looks like at this point we are pretty destined to hit that $35 mark, although we are at a pretty oversold level, and the last time we were this low, we did have a very nice recovery, and even when we weren't as low as we are right now, we had a nice recovery as well. So would I be surprised for a turnaround at this price? Not at all, but buyers are to be expected, at least in the short term. Keep an eye out for this $35 mark over here, but don't get too greedy because it doesn't necessarily have to go that low. What we've been seeing in the markets recently, especially on the S&P 500 and the QQQ, is that before we even get to these markers, the buyers are stepping in and then pushing the price higher. And if we get a recovery, I guess we're looking at the 42 level, and then after that, maybe the 46 and 48. Next up, looking at Visa and Mastercard and PayPal. So we see a very nice hammer candle here as well. It doesn't really matter that it's a red candle or whether it's a green candle. The buy and close are pretty similar, but we do see a lot of buying pressure, especially on that big volume. We'll probably see something similar on Mastercard as well. Actually quite a bit different. So we see a lot of volume, but it is a very indecision candle. The buy and close are similar. However, instead of just being a wick on the bottom and showing buying pressure, we're also seeing a lot of selling pressures. This is actually kind of surprising for me because if you look at Google, you don't see that 367 being touched. But if you look at the high of the day, it looks like 368 was actually touched at some point intraday, but it must have happened very fast. It wasn't recorded on this chart over here. So that's why I like technical analysis on the candlesticks a lot more, because you see a lot more of the story than you see on Google. And you can see here around 130, there was a big price change for whatever reason, but it came right back down afterward. And next up, looking at PayPal, so it looked like we were recovering and to fill this gap over here. It looked like we were bound to do it, but never happened. And we have this red candle. It could be potentially forming a channel, potentially not, and we could see the lows of 180, but I wouldn't necessarily count on it either. It looks like these low 200s could be the potential bottom, but I mean, anything is possible. And the last stock we're going to be looking at is RIVN. There's not really much here to go on. This could be just a traded pullback and then continuing making new highs. But if I am a betting man, which I am not, there's a very likely chance that this could be the peak on such a momentum-driven play. You have such a red candle over here. It could be difficult to switch that momentum right back toward the upside. I mean, I've seen crazier things in the market in the last year and a half, so nothing is out of the question. But again, if I'm a betting man, most likely I think this is coming right back down. It's overvalued. It's a very empty valuation in the sense that it's just hot air. In the same way that Lucid is, they're both great potential companies, but right now they just don't have the revenue to support their valuations and most likely are going to be coming crashing down over the upcoming week, even maybe less. Otherwise, that is the end of my video. Thank you very much for watching. If you're new to the channel, welcome aboard and hit that subscribe button. As always, smash that like button and I will see you guys in tomorrow's video.